Welcome back, everybody, to the deep dive. Today, we are going to look at something kind of interesting. It's about how the need for more natural gas is actually driving growth in certain dividend-paying stocks, particularly in companies moving natural gas through pipelines.
You got it. We're diving into this Motley Fool article today.
Yeah.
And, really gets into how this growing demand is not just a prediction, but it's leading to some big-time projects with a lot of potential if you're into dividend income. We're going to try to lay it all out for you today.
Sounds good to me.
What's causing this growth in demand, who the big players are, and how it all fits together.
All right, well, let's get into it. This article makes a pretty strong case. They talk about a few big reasons why this demand for natural gas is going up. First, you got manufacturers bringing their operations back to the U.S., reshoring.
Right.
And they need a reliable source of energy.
Right.
Then there's the whole move towards electric vehicles, electrifying all sorts of things. And then maybe the biggest factor right now is all those huge AI data centers and how much energy they use.
Yeah, and it all adds up to a big jump in the need for natural gas.
Absolutely.
You see demand for a resource like natural gas going up like that.
Yeah.
You got to ask yourself, well, how are we going to get all this gas from where it is to where we need it?
Right.
And that's where pipelines come in.
Makes sense.
More demand means you need a better way to transport it.
Of course.
More efficient infrastructure.
So that brings us to our first big topic, the Traverse Pipeline Project. This sounds like a pretty massive project.
Oh, it's big. It really is.
Yeah.
The article goes into detail about how it's going to work.
Yeah.
There's a joint venture called WPC, which is Whitewater, MPLX, and Enbridge.
Okay.
And they're hooking up with Targa Resources to build this pipeline. It's going to be 160 miles long. And get this, it can carry up to 1.75 billion cubic feet of natural gas every day.
Whoa. That's a lot of gas.
Huge.
How much would that even be? Like, how many homes could that pack?
Oh, it's enough to power millions of homes.
Million.
Yeah. And it's running right along the Gulf Coast. It connects Agua Dulce in South Texas with the Katy area.
Okay, those are big energy hubs.
Well, yeah. Agua Dulce is a huge natural gas trading hub.
Okay.
And Katy is also a major center for processing and distributing natural gas. This new pipeline, it's going to connect with other pipelines that are already there.
Okay.
Like the Whistler, the Blackcomb, and the Matterhorn Express.
Yeah.
All owned by the companies involved.
All right, so why is this pipeline such a big deal? What's the advantage?
Well, the article says that this pipeline is really going to make it easier to move natural gas around the Gulf Coast.
All right.
And that means that the companies who need to ship this gas, the shippers,
Yeah.
they'll have better access to the markets where the demand is. And that includes all the LNG export terminals.
The LNG export terminals. So those are the facilities where they turn the natural gas into liquid so it can be shipped overseas.
Exactly. It's all about connecting production with international demand.
Right. Okay, so it's not just about moving gas around within the U.S.
Nope. This pipeline is tapping into global markets.
Global demand.
Huge growth potential there.
And this isn't just some idea, right? They're actually going to build this thing.
Oh, yeah. It's set to be operational in 2027.
2027. Okay, so not too far off.
And the best part is
Mm-hmm.
they've already got long-term contracts in place.
Contracts for what?
Transportation agreements
Yeah.
for most of the pipeline's capacity. And they're with really solid shippers, what they call investment-grade shippers.
Okay.
So low risk of default.
Oh, that's great.
That's good news for investors. Steady, reliable revenue.
So this Traverse pipeline is just part of a bigger system, right? Doesn't this WPC joint venture have a bunch of other assets in the area already?
Oh, yeah. This isn't their first rodeo. WPC already owns the Whistler pipeline.
Yeah.
And they got big stakes in a bunch of other ones, too, like Rio Bravo, Blackcomb, ADCC.
Oh.
Oh, and they own half of the Waha gas storage facility, too.
Okay.
So they're really building up their network in that region.
Wow. It sounds like they're really creating a pretty complex system for transporting natural gas. You mentioned the Rio Bravo pipeline. Is that one particularly important?
It's a good example of how this infrastructure directly feeds into the growth of LNG exports.
Okay. How so?
It's going to be supplying gas to next decade's LNG export facility in South Texas,
Okay.
which should start running next year. It really shows how crucial these pipelines are, connecting domestic production to international markets.
Okay, so we've got all this demand, and we see they're building the infrastructure to meet that demand. So what does this mean for investors? What are the opportunities here? The article talks about a few specific companies, and I'm really curious to hear about them. Let's start with MPLX.
Okay, so MPLX has a really big stake in the Traverse pipeline.
Big how?
They own 30.4% through that WPC joint venture, and they've got another 12.5% directly through their Blackcomb stake. So they're pretty heavily invested in this thing.
Okay.
And MPLX is an MLP, a master limited partnership,
Correct.
which basically means they pay out a big chunk of their cash flow to investors.
Right, which is why they're so attractive for dividend income.
Exactly.
Okay, so besides Traverse, they've got other stuff going on, right?
Oh, yeah, they're busy.
Yeah?
Blackcomb and Rio Bravo are both set to start up next year, which is great for their cash flow. And they're working on a fractionation complex on the Gulf Coast.
Fractionation complex, remind me what that is again.
It's a facility where they separate natural gas liquids into their individual components. Propane, butane, things like that.
Oh, okay.
That one should be up and running in 2028 or 2029. And they're also partnering on an LPG export terminal, which should open in 2028. Plus, they've got a couple of natural gas processing plants coming online in the next couple of years.
It sounds like they've got a lot in the works. And the article suggests this could lead to even bigger dividends from MPLX.
It's certainly possible. Their dividend yield is already over 7%. And they've been growing those payouts at a pretty good clip.
Yeah, I saw that. Over 10% per year on average since 2021. That's impressive.
Definitely shows they're serious about rewarding their investors. And all these new projects give them a good platform for continued dividend growth.
All right, what about Enbridge? They're involved in the Traverse project, too. Right?
Yeah, they've got a 19% stake in WPC, so they'll definitely benefit from Traverse coming online. But remember, Enbridge is a much bigger company than MPLX, much more diversified.
Okay.
They've got tons of projects in development. They're working on liquids pipelines, more gas pipelines, expanding their gas utility business, and they're even getting into renewables.
Renewables like solar and wind.
That's right. All of this gives them lots of ways to grow in the future.
And according to the article, all these projects should help keep their dividend growing, too.
Yeah, their yield is almost 6% right now. And they've been increasing it every year for 30 years.
Wow.
That's incredible. It really speaks to how stable this sector is.
3 decades of consistent dividend growth.
It's pretty impressive. It really shows they're committed to delivering value to their shareholders.
Mm-hmm.
And with all those projects in the pipeline, it wouldn't be surprising to see that trend continue.
Very cool.
All right.
All right, let's talk about the last company, Targa Resources. They've got a piece of the Traverse project as well.
Yeah, they own 17.5% through their investment in the Blackcomb joint venture.
Gotcha.
And just like MPLX, they're involved in a bunch of other expansion projects as well.
What kind of projects?
Well, they're building 6 new natural gas processing plants and 2 new NGL fractionators.
Okay.
And they've got some pipeline projects in the works too, all expected to be up and running by 2027.
Okay, so they're investing heavily in infrastructure as well. Their dividend yield is lower than MPLX and Enbridge, but the article pointed out something really interesting about their dividend. They increased it by 33% this year.
Oh, yeah.
After a 50% increase last year.
Yeah, they're going all in on dividend growth.
It seems like they're really trying to ramp things up.
Definitely. It looks like they're planning to keep boosting that dividend as their cash flow grows from all those new projects.
So looking at these 3 companies, MPLX, Enbridge, and Targa Resources, it really shows how this expected increase in demand for natural gas is a huge driver for growth in the whole natural gas infrastructure sector.
It's the big picture right there. All these companies are making strategic investments in projects like the Traverse Pipeline and other infrastructure to meet the expected growth in demand. And these investments should lead to stronger cash flows for them in the future.
And ultimately, that means more potential for dividend growth, which is good news for investors looking for that kind of income.
Precisely. All those trends driving up natural gas demand are creating the need for more infrastructure. And that's giving these companies the chance to boost their earnings and their dividends.
So to sum it all up, we've seen how this predicted rise in natural gas demand, caused by reshoring, the move towards electrification, and the energy demands of AI, is leading to the development of new infrastructure. Infrastructure like the Traverse Pipeline. And this project, along with the other expansions that companies like MPLX, Enbridge, and Targa Resources are undertaking, is expected to drive up their cash flow and potentially boost their dividends, which is good news for investors.
It really highlights the link between major trends in energy and their potential impact on individual investments.
Yeah, this deep dive has been super insightful. Seeing how these companies are positioning themselves for the future is really fascinating.
It definitely gives you a lot to think about.
It really does. And it makes me wonder what other sectors might see similar growth spurred by changes in demand? What other long-term trends are creating opportunities like this beyond the companies and the natural gas sector that we've discussed today? That's something worth considering.
It is. It's a big world out there. Lots of opportunities.
That's all the time we have for today. Thanks for listening, everybody, and we'll see you next time on The Deep Dive.
See ya.